The big question of the day is basically, should you trade your own personal funds or you should rather trade a prop account? And the truth is that this is a highly debatable topic, but then by the end of this video, you actually decide whether you want to trade your own personal funded account or you would rather go for a prop firm account, because both sides have their advantages and disadvantages. Because I actually took out this test whereby I funded my own personal life account and at the same time was also trading prop firm. And the truth is that what the experience are not actually the same. So in order to make this video easy for any one of you to actually understand, I'm actually going to break it into two sections. Now the first section we'll be talking about what are the advantages and disadvantages of self-funded account and what are the advantages and disadvantages of a prop funded account, so you can actually do your own decision from there. Now these points I actually took them from my own personal experience, so maybe your experience might be different, but at the end of the day we'll actually come to a similar conclusion. Now here are three advantages of actually trading with a self-funded account. Now the first one is simply you have full control over your funds and there are no rules at all. Now as a trader, if you are trading with your own personal funded account, it basically means that what you do how you want, when you want, you trade when you want, how you want, with whatever amount of money that you actually deposit there, without anyone telling you that hey you can't do this, hey you can't do that. So this is the first advantage of a self-funded account. Is basically means it has no rules and it has no limit. Do whatever thing you want to do, it's your money. And the second advantage of a self-funded account is that what you are 100% entitled to whatever profit you make. Now here is it, in case you fund your own account with your own money, you are not going to do profit split with anybody. Why? Because you deposited your own money, you traded on your own terms, so whatever profit you make is 100% yours. You don't have to split it with anybody. And this is another great advantage of having a self-funded account. So basically, if you make $1,000, the whole $1,000 is yours. If you make $1 million, the whole is yours. If you make $10, the whole $10 is yours as well. And the third one is basically, when you have a self-funded account, you basically set a long-term freedom for yourself. Now the truth is that what when you look at the long-term picture, there's more freedom with trading your own personal funded account than a prop account. And the reason is simple. With your own account, you can gradually grow it without being afraid of anyone coming to shut it down or any particular day. No, provided that what you use a reliable broker like LiteFinance and you basically sign up to them and use them, you can actually grow your own personal account for the long run without having any single fear at all, which we can't actually say about prop firms. Now I've given you three advantages of a self-funded account. Now let's take a look at three disadvantages of having a self-funded account as well. Now the first is simply 100% risk is yours. Now what this basically means is simply, if you should lose the whole account in a day, it basically means that what the whole of your money is gone and there is nothing you can do. So if you deposited $1,000 and you lose the whole of that $1,000, well, you have no one to hold reliable than yourself. So basically means that what you sit at 100% risk when you trade your own personal funds. And the second point is basically you need higher capital to actually trade it. Now the truth is that when it comes to trading your own personal funds, I won't lie to you, trading $100 account cannot actually sustain you on the long run. For you to actually say yes, you are trading your own personal account and you can actually make money off and be, let me say, and be really comfortable, we are talking about trading $5,000 plus self-funded account. This is the only amount whereby you can say, okay, you are a trader who is 100% relying on your trading income because you have over $5,000 in your account and whatever profit you make is yours. And with $5,000 in your account, you could be making a decent profit as compared to someone who is going to deposit a mini $100 and then be trying to juggle up. So basically, if all you have to deposit is $100, see it as a learning phase and not a phase to actually become financially free with trading. Until you have about $1,000 plus, then I'm sorry, whatever amount you deposit is just for self-build purposes. Now the final disadvantage of trading your own personal funded account is basically the psychology is really heavy. Now when you come over here, you are trading 100% of your funds. So maybe you have about $5,000 in your account and you deposited $2,000 into your trading account. You basically know that what if you should lose this $2,000, it depends on who you are, where you are from. Getting this $2,000 back wouldn't be an easy work. Like for example, there's where I find myself, it's difficult to see someone who is even working a 9 to 5 that can actually raise $2,000 within 6-month period. It's really rare to actually find. So basically what I'm trying to let you know is simply when you are trading a self-funded account, the psychology will really down on you. Why? Because you know that what if you should make any mistake, the whole of your account is gone, and the fear of making mistake will actually lead you to make more mistake that will actually see you lose more money. So basically guys, these are the 3 advantages and disadvantages of trading your own self-funded account. Now the advantages of trading a prop account is basically access to huge capital with little upfront cost. Now what does this mean? With prop firm account, unlike your own personal account, whereby if you need $2,000, like for example, if you want to fund your account with $2,500 in a self-funded phase, meaning that you have to deposit a solid $2,500 into your own personal account to actually have access to trading with this amount of money. But then when it comes to prop account, it's totally different. Now let me give you a typical example. Like for example, if you sign up to Blueberry $25,000 account, which give you 10% risk level, which basically means that what you have access to $2,500 to actually trade with. But unlike the self-funded account whereby you need to deposit a solid $2,500 to get $2,500, over here all you basically need to deposit to get $2,500 is basically $125. Meaning if you pay $125 upfront fee, you have access to $2,500 as solid capital for you to actually trade with. Now the second point here, the second advantage here is basically lesser risk. Now when you're trading prop firm account, the risk is very low. Like for example, if you should deposit, maybe you paid $125 to get $2,500 account from Blueberry funded, because it's $25,000 account, but you have access to 10%, which means that $2,500, meaning that what you can actually lose the whole of that $2,500. And according to the books, you lose $2,500, but in reality, you know that what the only amount of money you actually lost was the $125 that you actually paid for it, and nothing more, nothing less. So this basically means that what you have lesser risk at your side, unlike the self-funded account. Now the disadvantages of trading a prop firm is that what they have very strict rules. Like when it comes to their strict rules, they tell you how much you can actually lose in a single day. And I would say when it comes to these rules, Blueberry funded is a bit free with their traders as well. Now let's take a look at something here. Now with Blueberry funded, in case you buy this $25,000 account and you pay $125, meanwhile in reality you are not paying $125. If you use my promo code, you get it for just $100. My promo code is actually in the comment section. Use it alongside my link and you get 20% off. Actually, sorry that I didn't say it earlier on. Now let me say with Blueberry funded, you got their $25,000 account and you have access to $2,500. Now in reality, you have $2,500 to work with, but then in a day you cannot lose more than $1,250. Now these are disadvantages of prop firm. Number one is that you don't have full access to the money you actually see in your account. You can't actually do whatever thing you want with it. Why? Because they are telling you that okay, in a single day you can't lose more than this, which is $1,250 in case you buy this $25,000 account. And the second disadvantage here is basically the profit split. Now most prop firm will actually give you 70 to 80% profit split, which basically means that what if you should make $1,000 profit, you are only entitled to $700 to $800 maximum. And this is another great disadvantage. That's why I always say Blueberry funded is more like a gift to the Forex industry. Why? Because with Blueberry funded, you are actually getting up to 80% profit split and more. So basically what this means is that what if you should make $1,000 profit, according to Blueberry funded, they are going to give you 80% of the profit, meaning you take 800 and they take 20%. Now this might sound good on paper, but just imagine you working your ass out just to split profit with someone. Well, that's why Blueberry funded also give you the advantage to actually request for 90%, which means that what you are going to take 90% of the profit split and they are going to take 10% of it. So guys, this is another great disadvantage when it comes to trading prop firm is that what you don't have 100% access to whatever profit you make. Whatever amount you make, they're actually going to take anything from 30% to 10% from it without and there's nothing you can do about it because it's already stated in their terms and conditions. And the final disadvantage is basically you can lose your account at any given time. And what this basically means is simply you can just wake up one morning, place trade, and the next thing is simply you receive an email saying, hey guy, you just breached your account. And how can this be possible? Like for example, if you are trading on Blueberry funded, they prohibit news trading. And what this basically means is simply you can't actually place a trade 2 minutes before or after the news when it comes to trading with Blueberry funded. So for example, let me say there was a high impact news, maybe CPI or NFP, Now maybe NFP came just 1 minute ago and then you went ahead to place a trade just 1 minute after NFP news. Well, you just lost your account and there's nothing you can do about it. So guys, basically when it comes to trading prop firm as well, you can lose your account at any time. Any moment you violate any of the rules, you can actually let go of your account. So guys, now down to my final verdict on which I actually prefer between a self-funded account and then a prop account. Now here is it. So if you're a beginner who is getting started, I would advise you to actually sign up to a prop firm. Why? Because you can actually risk a little bit of capital and then get access to a usual capital to actually trade with, or probably to help in your learning curve. But then if you're a beginner who knows that you are confident in your trading strategy and you are really willing to put in the effort into making profit and you have access to a lot of money, there's no problem. You can deposit anything from $10 and above into your LiteFinance account and also start trading. And for a decent start, I would tell you anything from $500 and above is pretty much cool to get started with. Now down to the other option. Now if you're an experienced trader, there's no doubt, if you have capital, of course go with live account. Why? Because you have access to do whatever thing you want and you have full control over your account. You have full control over your money. So if you are in this situation and you're an experienced trader, I would advise to go with a full self-funded account. But then I still can't decide for you. You know the pros and cons already, so you decide which of them you actually want.